Good evening. Ira Epstein with your financial market wrap-up. And this wrap-up is for Tuesday, the 22nd of November, 2022 at 5:34 p.m. Central Time. I apologize for no updates last night. I have family in from out of town. I had to go out and get Christmas tree, put it up for my wife. Turkeys had to be bought. Food's got to be brought in. You're going through what I'm going through. Keep in the back of your mind that volume in America and all the markets is declining in a major fashion. People are hitting the roads today and tomorrow. Tomorrow's trading volume will be much lighter than even today. However, when you take a look at what goes on tomorrow, you have a full array of information. You have the Mortgage Bankers Association first thing in the morning, their numbers. Advanced durable goods data, weekly jobless claims, U.S. preliminary November manufacturing service sector PMI, home sales data, University of Michigan final consumer sentiment, EIA natural gas, Baker Hughes rig count, minutes from the last month's FOMC meeting, EIA petroleum estimates. Why? Because the markets aren't going to be open Thursday and in most cases Friday. So they're getting all the reports in way ahead of time. What do you do with it? Well, you're going to have to digest it. It's going to be coming fast, furious for the thin volume. Who knows what it creates? So buckle in is buckaroo. What was that saying? Buckle in, buckaroo? I grew up with that. That was funny. Okay. So I'm bothered because I don't understand the report out of the Wall Street Journal yesterday that broke oil and here it comes running back up. All right. What's the right thing? Did they discuss 500,000 barrels if Russian oil's taken off the market? I have to think it is. The Wall Street Journal, they're reputable. They're standing behind that story. If they're standing behind the stories, I believe they're news organization. And that means the delegates did discuss it. They had a leak on it. They reported on it. The Saudi, I don't trust at all. They'll come out and say, no, that's not it. We're staying to 2023. Well, yes, they're not going to probably do 500,000 barrel increase now. They'll wait and see how bad Russia has to shut in its oil. And then there'll be the grace. Think about this. President Biden gave immunity to the Crown Prince. There'll be the grace of the world and say, we're going to make up the difference. Your people are going to get oil. And of course, then the battle with Russia could begin. So who the heck knows where this all goes? But it is an interesting time. As for the dollar, I have technical work that is still saying this dollar could surprise to the upside. I got to be very careful with that. In the stock indices, the more I look at it, the more convinced I am that we're going to have our Santa Claus rally this year and that wherever the stock indices are now, they're going to be higher. I predict that you'll close over the 4,000 level from what I'm seeing on my weekly charts on the S&P. Wouldn't surprise me. Doesn't mean the rally won't then give ground up in January, but I think you're going to have all those parts come together. Could I be wrong? I'm Mr. Swiss cheese. I'm wrong a lot. So let's take a look, if we could, at the S&P. The battleground is well defined at 39.28. For the moment, you have a market that's drifting, and I think you can see this right up here. You have a pattern now that's reinstated. Higher lows, higher highs just happened today. The market could get a bullish crossover where the 18-day average next week gets over the 100, which might call for a move back up to the 200-day average in the gray area. Combine that with the Bollinger Band, now you can see where the resistance would come in. Maybe let's call it the 4,100 zone. Wouldn't surprise me. And momentum could re-embed. What does embedded mean? It means that both numbers in the slow stochastic study close over 80 for several days in a row. Now, you cannot go by tonight, which is Wednesday. We don't know where the market will finish. But we can most certainly go back, and let's see if I can get it to do it, to Tuesday. Both numbers weren't there, or the day before. So I said next week. I'll stick with what I said. We do have abbreviated trading session on Friday. Remember that. The markets are closed on Thursday. They reopen Thursday night. Electronic, close early Friday. So you could get, depending on how the day goes tomorrow, 2 days this week of embedding and kick off a third, and then I'm in line for what I think could happen. When I take a look at where we're at with the NASDAQ, first, you see the readings? You're overbought. I define overbought in slow stochastics as any reading over 70. That's what I teach in my enhanced Bollinger Band course, which I'll talk about in a few minutes here. If the market can clear this high, well, so what? You'd still have a lower low, higher high. I don't see a trade pattern that makes sense. When I come to the micro mini Dow, you have the embedded reading. So where do you think I think the power is? One of the things that people new to this should understand, when you have a bull market, you don't buy the weakest segment to catch up with the strong ones. You buy the strongest segment. That's what's moving the market. When that dies, the little bounce you might get out of the back end isn't worth the effort half the time. So this is still the power until the red line closes under 79. The upper Bollinger Band at 34,530 is an open target. When you look at the micro Russell, like the other indices, it's not in a buying mode, not at all. In fact, if anything, it's fighting the 200-day moving average of closes. It had hit it before, stayed over it, got under it, and when you come back to test it, it's resistance again, but not as good. You've already gone through this doorway of wearing it out, so I don't give it quite the strength pattern on rallies, in other words, holding prices back as it first had. Here's what bothers me, and here's what I've been telling my paid morning subscriber videos people. I've been telling them the VIX is just bearish. It keeps acting worse and worse. That is the making for a bull market rally in stock indices. When you don't want to own this, sometimes it's the back door telling you what's going to happen in the indices. If it embeds, it really adds fuel to the fire. I'm not saying it's embedded yet. You only got the first day of doing it, and you're down to the lower Bollinger Band. Do I ever teach to sell a Bollinger Band? I promise you this word, never, unless I made a mistake. On the 30-year bond, you're embedded. I'm bullish. But it's not that way in the 10-year or the 5-year. The curve yield's now in the 70s. I think it's going to 100. I think I said in March, I'm looking for that to go out to 100. There were opportunities galore in the 40s to own the 2-10-year, and now it's almost doubled in value, by the way. Here's where you're at in the 10. See how it's not embedding? It's just staying overbought. Then we get to the dollar index. I'm bothered in the dollar index by this. You had a bearish embedded reading that you lost with the action from the Wall Street Journal report yesterday. You didn't give it up. You stayed unembedded. You could have re-embedded today. Now that that's over, one of two situations has to happen. Either you're going back up here to 108.87, or due to this, the market goes immediately down, takes out the lowest low we had, and it just throws that all out the water. I don't know which one of the two. Some of the currencies, like the New Zealand dollar and so on, acting very strong in the face of all this. Hard to tell what's going to be real with it. In the eurocurrency, you see the weakness, but you'd expect it. 40% of the dollar is made up of the weighting of the eurocurrency. You lost the embedded reading. If it's the flip-flop, if the dollar was a false move, then this market should go back up through that high. If the dollar's going to rally, this should go down to the lower Bollinger Band. I'm sorry, the 18-day average. It's a rough one right here. I'd expect that on a thin trading week too. Then we get to the British pound. Well, Mr. Sunak's got his hands full. The first parts of housing that he's throwing out, there's plenty of dissent. He has a slim majority. So he has to, in Parliament, walk a fine line. I don't know if he can do it. It's going to be very interesting. Are we going to embed is the question. You can't count Wednesday's action, so we go to Tuesday's. Both numbers over 80. Day before, both numbers were not there. So you're just overbought in the market, not yet embedded. Embedded's real important. Bitcoin, well, we see there's no assets in FTX. I don't know how they don't put this guy in jail. To me, it's a con job all the way through. I don't know if any of you saw the interview today. I'm guessing 4 o'clock, 4:30, Terry Duffy of the CME group on CNBC. Whoa, did he rip into all this? And rightly so. And I understood what he was saying. You know, he was smart enough to say politicians know that they weren't bought by Mr. Bankman-Fried. Of course they were bought by him. But he runs the exchange. I don't. And why else would they have given all this leeway? And this is the savior and everything. And nobody's really looking in, as Terry Duffy properly said, at how the books are there. First of all, there are no books. What's margin? What's behind it? There's nothing absolutely behind it. Where's the money? What's the security? That's why you have exchanges. You're protected, at least as much as you can. Anything can happen in a crazy world. Not this thing. 1 million people? 1 million people. I don't think they're getting a penny. I think that's wrong. There'll be pennies to be given. All right. There's plenty of property to divide up. There's got to be other assets they'll dig up, and they will. So you are going to get back something on the dollar. Unfortunately, it's going to be pennies. Just remember that. Brent versus WTI crude, all the way down under the 18-day average, hasn't really shown a rebound yet. So the differential staying very tight. But when you look at crude, you had your test of the lower band. You bounced away. You're not in a bull market. You're still bearish. Now, tomorrow's so important. Besides all the U.S. information, the European Union has to decide what's the cap price. Are they going along with the G7 for the cap and the sanctions on Russian oil? Big day tomorrow. There's so much to digest, I may not go to sleep. I'm not kidding. There's so much to do and such a thin market it's going to be in. I don't know what you do about it. But it's a day full of news like we haven't had in a long time. Nobody has leaked out yet what the European Union might agree to a cap. The U.S. wanted the price somewhere between $40 and $60, which is the estimate as to what it cost Russia to develop a barrel. You know, what goes into the barrel of oil. Okay, what do we do with that? So what's the gallon going to cost? They have to come up with that. They don't want to be as harsh on the days of the cutoff from December 5th. What happens? How long can a ship get in before it's considered that it violated the rules of the sanction? They want a longer time frame. Of course they do. They want Russian product as long as they can get it. The problem is once they put the cap out, my instincts are Russia's going to go, screw you. Let's shut off all that gas throwing through the Ukraine. They're stealing it from us anyways. Of course, they don't have the facilities left to use it, but that's another story. It's easy to say, just screw everybody. We're going to stop right now. They're going to be stopping anyways from December 5th on. Gives Putin the chance to have the bravado and do whatever he's going to do. That's what I'm guessing is going to happen. It's just a guess, but that wouldn't surprise me. Resistance going to be up at the 18 and the 100-day average here. Heating oil. Remember, I've switched over, by the way, to the Jan. So a lot of switching going on now. You got down to the 200-day average. What do I teach you in these tapes all the time? The first time you hit a 200-day average, and I'm not talking day after day. You hit it back in September. Now you hit it again. It's generally a support zone. If you go up to it, it's a resistance zone. Pay attention to it. A 200-day average is a 4-year moving average. It has a lot of importance. Natural gas climbing through even the 200, on its way to the 100, but you're in a zone that's very dangerous up here. I think the market's realizing that our gas is worth a lot more money suddenly for Europe, especially if Russia is shutting things off, which I fully expect them to do. That adds value to it. You keep hearing me talk about my enhanced Bollinger Bands. Here they are. What do you do with moving averages? How do you play with it? Do you know how to do it? 13 chapters going to teach you how to do this. Then in the mornings, you get to see for 2 weeks with the course my enhanced my morning subscriber videos, the paid ones in futures, spiders, ETFs, and stocks. You get 2 of them to see what's going on, and the charting software so you can see what I do it yourself, work with the numbers, and you go, whoa, where have I been with that? Take a look at this and learn. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.